Jagadish Nangineni joins us now, Managing Director with Sobha Developers, to walk us through that how things have transpired for Sobha Developers for the quarter gone by. Jagadish, sales at a record high in the first quarter. What are the expectations for sales growth for FY23?
Morning, Nikunj. Sales have been, steadily growing in the past 4 quarters or so, particularly after the second wave. Currently, we are at a run rate of about 1.3 to 1.35 million square feet per quarter. And if we sustain this volume at the current pricing, then we hope to achieve at least about 10 to 12%
I also want to understand, considering, the market where you're dominant in, Bangalore, that is, has been seeing very, very healthy trends. It's really managed to beat markets in Mumbai, or for that matter, Delhi and NCR as well. What's the visibility that you have going forward, not just for FY23, but maybe for a little longer term time frame as well? Because, start of COVID, when the realty boom and uptick really began, everyone said that, real estate is coming out of a multi-decadal bear market. Is that a fair assumption?
The past 1 year, in fact, past 2 years, and what we see as leading indicators, they all point to a very sustainable demand. Bangalore has been our mothership for quite some time, and it will continue to be so. We hope to capture this demand upcycle with new inventory and launches over the several next few years, and we are gearing up for that. The demand is there is a strong demand that we can clearly see, fueled by income increases, and which translates to affordability. And this demand, particularly in the last couple of quarters, we have seen with the increased pricing that showcases quite a bit of robustness in the robustness and depth in the demand.
The one thing, Jagdish, I bet all investors and, all the entire real estate market watchers want to know is what's happening to pricing. Demand surely is back, but has demand reached the level where you can up prices as well? And especially in the Bangalore market, or for that matter, Gurgaon as well, where you're now venturing into.
Absolutely. If you look at the price increases that we have done in the past 1 year, if you compare our Q1 FY22 versus Q1 FY23, we are overall price realization is up by about 10.5%. And that's where, as I mentioned earlier, the the demand, that's both the volume is going up and the pricing is going up, and hence our overall realization and values are going up.
Now that commodity prices have started coming down, will there also lead to margin expansion? Cement prices are down, steel prices are down. Would you be experiencing uptick in margins because of that?
Because the prices have gone up quite a bit in the last 1.5 years. One, there has been an increase, and two, there has been an increase in volatility of the pricing too. So given both, it's very tough to estimate whether there's going to be margin expansion, or is it going to, we will be able to sustain the existing margins. What we have done is we have factored in both the increased cost and also the increased volatility by adding some more cushion in our estimate of construction cost. So that should help us in navigating this both volatility and the higher increase.
Just one more thing before we let you go, Jagdish. Your net debt, as I understand, is down nearly 1,000 crore rupees since the peak. What's the visibility now going forward?
So now it has to be a balance of both allocating capital for growth and also sustained debt reduction. So debt is a double-edged sword. So it can make you or break you. So we'll have to we are treating it very cautiously. So we have made a lot of efforts to reduce our debt by about 940 crores in the last 7 quarters. And we will continue to do so, but at the same time balance it with growth wherever it's required.
We'll let you go on that note. Appreciate your time. Thanks much for joining in and giving us a sense of the pricing as well as demand scenario.